What's going on, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is April 29th, 2021. Please click the like button on this video and subscribe to my channel. And feel free to share this video with 12 of your closest friends. It really helps support the channel. I really appreciate it. Today we're going to be talking about the broad market indices. We'll talk about the price action. Today was definitely very much a whipsaw day. So I could definitely see a lot of people getting really messed up by the price action today. So we'll talk about that. We're going to go through under the hood. We'll go through some of my trades. We'll go through the options order flow, all that good stuff. Quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump right in here. Let's take a look at what we had. So just to set the stage for the price action today, we are approaching month end. So it's the 29th. We have today and then we have Friday. We just had Fed Wednesday yesterday. We just had a bunch of earnings yesterday and a bunch of earnings today. This is pretty much like the toughest time to like swing trade and day trade because, there's so much chop on the tape. There's all these catalysts coming, all this new information, and the market's trying to interpret all of it. And especially like right now, it's literally month-end trading. So you also have, I remember when I used to work at Vanguard on the institutional side, on month-end, really like the last 2 or 3 days of the month, there is so much trading volume going on. Everyone's kind of running around the trading floor, like chickens with their heads cut off. And there's a lot that needs to be done just mechanically to rebalance portfolios, make sure risk is in line, all of that stuff. So it's also tough to really put much weight into the moves that you're seeing. So like, for instance, like if you're like hardcore Mr. Technical trader, like candlestick trader, you can get thrown off like, oh my gosh, this one stock I'm in had a red candle today. Like, it must mean there's sellers that are like coming in and, the stock's no good anymore. I'm selling it. Like things like that, you can really get sort of like screwed up. So it's kind of like when you have these really like catalyst rich periods in the market, it's month end, like all this stuff, you kind of have to like slow yourself up a little bit. So you can see here S&P 500 for box scores, we closed up 0.64%. We had the NASDAQ QQQ finish up 0.36%. We had the IWM small caps close down 0.37%. And we had the Dow Jones close up 0.65%. You can see here for today's action, this was major whipsaw. So we had, I'm going to go to the hourly chart. And look at this V right here. So we had Apple report strong earnings, and we had Facebook report strong earnings, and then the market really just opened up, huge gap higher, and then sold off in the first, hour and a half of the day. And you can see it sold off on volume here. And then, we tagged this weekly value area high. We actually dipped inside that weekly value area. And I think that's where a lot of traders, could have gotten stopped out of a bunch of positions. We pretty much bounced right off of that. And then we rallied into the close. And you can see after the close, we gave a little bit back here. But to me, what it's looking like is another thing just for context for everyone. You really have to be a context player when you're in the markets. January. First 2 weeks of January are fantastic. Then we had 2 weeks pretty much of an epic sell-off. February, we had the same exact thing where, we had an awesome couple weeks. Then we had a big sell-off. And where were these? So January was right here. So yeah, you can see end of the month in January was horrific. Then February, awesome first 2 weeks. Then the last 2 weeks were horrific as well. March, first 2 weeks awesome. Then last 2 weeks were also terrible. If we look at April, we had an amazing first 2 weeks. And then really in the latter half, all we had was a little consolidation in time here. We had a little dip for a couple days, but then the market really righted itself. And you can see, we've come out of this really nicely. So I really think like for today's price action, the market went down for a little bit. It's like, the market has had a really nice month. There's this month-end rebalancing that has to happen. People are going to take profits, and we can't really like lose our minds over that. If there's like one red day in the market, that's okay. But sure enough, I think just as a testament to the strength that we're seeing in the market, we had some selling early on in the day, and the market really just bounced back very nicely. So to me, that shows me like there's a lot of strength here. And we have the Federal Reserve that said they're not going to back down on their asset purchases. The biggest names in the market, the mega caps, are all reporting nice earnings. So yeah, this is, I think, a constructive setup in the market. I think it still is. And tomorrow, we might get some more wonky price action. We might even sell off tomorrow. And I don't really think it's just that big of a deal. I think we have to, at least for me, I'm playing for May 1st. That's really like, I consider this month largely over, tomorrow's price action. I don't think it's going to be like life-changing or anything like that to the upside or the downside. And then we will move on. If we look at the NQ, you can see here, we put in kind of like a doji candle today. IWM, or we'll look at the Russell Futures. Russell Futures, I have a bullish position on the IWM. This thing, it really could have slipped into the abyss today. Like you see, like at one point during the day, this was down like over 1%. And, we ended up closing down 0.3% or something like that. Nothing too crazy. So this as well, the small caps, they've had a fantastic run, in a very short period of time. If we get one day where it's like, the IWM's down 0.37% into month end, I don't really think it's that big of a deal. But we'll see. And then we have our Dow Jones. Dow Jones closed positive on the day. And you can see we tagged this 20-day simple moving average, and now we're bouncing off of it. Some earnings that came out. We had Amazon that just reported after the bell. I actually put on an Amazon earnings trade. And Amazon had a really nice earnings report. You can see it's up a couple percent in the after hours. And one of the questions I received is like, why is Amazon not up more? And, Amazon had a nice earnings report, but is it really like a secret to anyone that Amazon is a good company? And the other thing, too, is Apple reported good earnings, and Facebook reported good earnings, and Google reported good earnings. Amazon was kind of running up that whole time in anticipation of this report. So that's another reason why, like, coming into this, I think there were a lot of investors that were like, hey, all these other mega names beat. Would it be so out of the realm of possibility for Amazon to beat? Probably not. So let's take a look. We'll go under the hood a little bit here, and we'll check this out. So you can see for our market breadth was positive by and large. So if you look at this, even when the market was declining, the breadth maintained, for the S&P 500 over 220 advancers, it never really weakened all that much. So that to me was like, all right, this sell-off, it doesn't really seem all that bad right now. And you can see, they all finished positive for the day. If we look here, let me just make sure. Okay, yeah, that's correct. If we look at our Finviz Heat Map, you will see, Facebook had a really strong day after reporting earnings. Google, also Amazon had a nice little lead up into the print. Banks were strong, and you can see, pretty strong breadth overall. One thing that is definitely a bit concerning is Tesla is very weak, and Tesla is like the leader of this one basket of stocks. That basket's pretty much like the high growth, high valuation names. Tesla, I think with the report that they had, I think the cat's sort of out of the bag, that this company, the growth and like the innovation in Tesla, I think it's been priced in like 1,000 times over. And I think this earnings report, really demonstrated that, where, really what pushed them over the edge was their, short-term trading of Bitcoin. So Tesla, I just don't really see any reason for this stock to just like moon higher. And if Tesla starts to like roll over here, that's a negative for this ARK fund, because Tesla is the largest holding. And with that, comes all those other high growth areas of the market. So very challenging here. Speaking of just like challenging, this earnings season as a whole has been, pretty difficult. So like Twitter, for instance, they reported just now in the after hours. And Twitter, you can see, is down here at, $58. Really had, a report that the street didn't like. And yeah, it's been very hit or miss. A lot of these names, even when they're reporting good quarters, they're kind of falling. So definitely, there's a lot of strength in that mega cap tech. But other than that, things are very difficult for some of these other names. So if we look under the hood here, we'll check out our sectors. And you can see here all the sectors that are in the top slots right now. So we have the Spider Innovative Tech, we have the ARK FinTech Fund, ARK Innovation. All those were down big today. All those down big. You can see the Chinese internets were down 2.47%. We have the blockchain ETF down 3%. So really the pattern that I'm seeing here is, and I've noticed this is a feature of the 2021 market, a lot of times, and this is like the secret, this was what made the 2020 market so easy. And this is why there were a lot of, retail, essentially like newbie traders that thought trading was so easy. In 2020, you could take like a sector, you could take a stock that went up, say like 8% over the course of 2 or 3 days. And on that third day, with the stock being up 4% in a straight line, you could be like, I'm buying out of the money calls on it. And you would end up printing money on your out of the money calls. Because, we were coming off of the pandemic. The market was super depressed. And it was like you could just throw a dart out there and anything worked. In this market, if you buy calls in something that's up 4% on the day, a lot of times you're literally top ticking it. Same thing with these sectors. If you're waiting till, the second or third day that they've ripped higher and then you're positioning, then suddenly you're looking at one of these days of like almost negative 3%. So yeah, it's definitely a more challenging market. And I think it's a market where it's been rewarding people that are selling into strength and people that are buying weakness. And I know that's something that a lot of price action traders don't really do. They always want to buy strength. So I think for that reason, it's like during a time period like this, you either want to be doing like less trading, being more selective, using less size, or just taking quicker targets. If we look here, like for instance, consumer staples was one of our stronger groups today. And that one had been doing, pretty poorly for the last couple of sessions. So I'll pull this up real quick. It's like XLP consumer staples. Yeah, look, this one, a really nice turn here. And if you're just like a price action, like momentum person, you're not going to want to buy this thing when it's down at 68. But now that it's had this turn, you might be like, oh, okay, now I'll buy it. Or even maybe when it goes back to the all-time high, then it'll be like, okay, now I'll buy. And, as you can see here, if you bought this all-time high, you really got crushed here. So yeah, just a bit more challenging environment. And if we look here at the style factors, you can see best performing style factor for the day was high div, low vol. And that's a pretty defensive area of the market. And then you can see high beta did well also, and value. So yeah, there were some pockets of strength, and then you can see momentum was down on the day and international momentum as well. All right, so let's take a look at some of my trades for the day. I didn't have, crazy trading volume today. 'Cause today was definitely like, it was pretty challenging. So let's see. So for today, I got long Lulu common shares for 344 spot 10. And then I got long some KLIC for 58.12. Lululemon, this was definitely one of my favorite setups for the day. And this one, I still like this setup here. So you can see Lululemon. It's a 30-minute chart. What the heck? Okay, yeah, so Lululemon broke above this 200-day moving average. You can see the 20-day moving average crossed over the 50. Then it just moved sideways, 4 days of tight price action on decelerating volume. Now we're popping out of that range. You can see the top was sold. So it's not like we had like perfect follow through, but we are kind of inching our way higher. So I like that we broke this range, and I'm targeting this 354 spot 84 level as a target. That's another thing in this market where I think since it's a lot more choppy, I think trading a bit more stock or higher delta on your options contracts can be a bit helpful, because when you're trading like super short-term options or a super low delta, that's where the market takes its 1% spill today, and you go, shoot, I have to stop out of all my positions, and then you're in a tougher spot. So yeah, Lulu still looks good. The other one I took, KLIC. This one, yeah, we got to pull back to the 5-day EMA, and you can see there are buyers that are coming in on these dips. So we'll have to see if this one gets that turn higher. And for some options trades, so I actually chased one this morning that was a mistake as well. So if you look at Norwegian Cruise Lines, so I saw the headline that the CDC was reducing regulations on the cruisers, and I was like, okay, some of these cruisers, they could really be in play this morning. So I picked up some Norwegian Cruise Lines 30 strike September 17th calls for $5.45. That was at 9:32. And you can see here Norwegian, let's see here. Yeah, Norwegian, look at the reaction. So I probably bought, right here, like right on the open. And this was just sold throughout the day on high volume on that good news. So that's, talk about, you enter late or you enter after the news and you can really get, run over. This was one of those where this stock gapped up about 4 or 5%. And, depending on what you're getting into, buying those big gap ups, you really put yourself out there. So for Norwegian, this was just not the reaction I was looking for. So I closed that one out same day. So I think that's the really important thing. That's like the important takeaway. That's one of my trading rules at this point. So I closed this one out for $4.40. I'd paid $5.45 for it. And I said here, I never stay in a long position if the stock puts in a bearish engulfing candle the day I enter. That's something, I added that to my trading plan just because that's something that, I'd made mistakes on in the past. Where like you enter for a specific reason, then you get just like an ugly day of price action, and then it's like, oh, well, I don't want to be wrong on this. Like, I'd rather, just wait and see how it goes. And I've had where Norwegian will be like trading at the bottom end of this range 4 or 5 days later, and I'm like, oh gosh, I wish I had, just corrected that mistake early. So yeah, that one I just corrected that. Now what else did I do here? Yeah, when the market got a little bit dicey earlier in the day, I said I'm watching the tape and it's a bit too early for me to make any adjustments. By the end of the day, if we've broken through key support levels, I'll shift to a more neutral posture. But for now, red days happen. If we end up with a minor pullback into month end, I don't see any reason to make big changes. And I stepped off the desk around noon to go for a run. That's another thing that's really been helpful for me when things get ambiguous and I'm just staring at the screens watching price tick. I don't know if that's something any of you can relate to, where you're just kind of like watching like, oh my gosh, is it going to go down? Is it going to go down? That's where you can make bad decisions. Same thing on the way up as well. So when the pace of the market's not that high, like it really wasn't today, I was like, I'm not going to make my big decisions at like noon on Thursday. So I was like, I'm going to get up from the screens. Yeah, so I ended up, I have an IWM May 7th call spread on the books. This is a 230 by 235 call spread. I bought back the 235 strike calls that I sold for 43 cents. I'd originally sold those for 80 cents. And now I'm just long those IWM 230 strikes. So that's essentially like a way of me getting more bullish on the exposure, or like a way of me buying the dip, buying back the short leg of that spread. And then we ended up rallying a little bit into the close. That was good. And then I entered an earnings trade for Amazon. So for Amazon, I had taken a trade in Amazon for earnings a couple days ago, and I was able to close it out for like a 25% winner, way before the report. So I just took that off the table. But then I actually wanted to trade Amazon for the earnings again. So I shorted a put spread in Amazon, the 3,345 by 3,335 put spread. I collected a premium of $3.15. And that one looks like it's going to be okay. So that one, yeah, right now we're at 35.76. So barring, a major correction or something like that in the next 2 weeks, could certainly happen. By and large, that earnings trade looks okay. Yeah, because you can see we're up here right now. So yeah, I was happy that I got that earnings trade on. I corrected my mistake in Norwegian. And that was about it for me. I didn't want to get too crazy. Like I said, tomorrow's month end. So just make it through month end. If we get a little bit of a blip or some selling, don't really freak out. I think that's about it. So let's we'll pull up our options order flow really quick. And yeah, in the morning, right off the open, it was just put bombers coming in, with huge orders. Then around 10 o'clock, you could see we finally started getting some calls. We had some Amazon calls, Novavax, ServiceNow, Qs. You can see Tesla flow coming in throughout the day. For the most part, we had maybe one or two bullish options. Yeah, right here. Then there was some bearish flow as well. So like bears. And then this IPOE keeps coming up. Let's look at IPOE. This thing probably just continues to grind higher. Let me see. Yeah, this looks like today I ran into a little speed bump. But yeah, this thing is grinding higher. Looking okay. Yeah, just okay. Because this thing has been in the dumps for a while. Now let's see what else we had. Yeah, and then Facebook. So Facebook had their really nice earnings, and it looks like players are positioning further into Facebook. So this is definitely one I'm going to keep on my radar. And if it can hold these levels, good stock to trade to the long side. That being said, that about does it for this market recap video. Hope you all had an awesome trading day, and I will see you all tomorrow in our pre-market session.